Let's talk about making your money work for you. Instead of letting it sit idly in a low-interest account, imagine your money actively generating more money. That's the power we're about to unlock. That's the heart of stock investing. It's about putting your capital to work in the engine of the economy. When you buy a stock, you're buying a small piece of a company, a real operating business, becoming a part owner. You now have a vested interest in their success. If the company grows and profits, innovating and serving its customers well, your share grows in value too. The more successful the company, the more valuable your ownership stake becomes. This is how wealth is built, not overnight, but steadily, over time. By owning pieces of successful businesses and letting them create value for their customers, their employees, and ultimately, their shareholders. The real magic is compounding, the eighth wonder of the world, as some say. Your returns start earning their own returns, snowballing over time. It's like planting a seed and watching it grow into a mighty tree. That's why long-term investing matters. Time is your greatest ally in the stock market. The longer your money stays invested, the more it can grow, benefiting from the power of compounding and the overall growth of the economy. Forget about timing the market or chasing quick wins. That's a recipe for stress and potential losses. Nobody can predict short-term moves with any consistent accuracy. The simple path, the one that leads to long-term success, is often the most overlooked. Buy good investments and hold them for years, even decades. Let the power of business and the economy work for you, generating wealth while you focus on other important aspects of your life. Stock investing is your tool for financial freedom, your pathway to a more secure and comfortable future. It's not gambling or chasing hot tips. Those are distractions that can derail your progress. It's about disciplined, patient participation in economic growth, aligning yourself with the long-term trends of progress. Ignore the daily noise and headlines. They are often designed to provoke emotion, not to provide valuable insights. Own a piece of the world's productive capacity and let it grow, contributing to and benefiting from global prosperity. This path is simple, powerful, and available to everyone, regardless of their background or financial expertise. You don't need to be an expert. In fact, overconfidence can often be a disadvantage. Just get started and stay the course, remaining committed to your long-term goals. Let your money work for you day and night, even while you sleep, generating passive income and building wealth automatically. That's the essence of stock investing, a simple, powerful, and accessible path to long-term financial security. Before investing, know your why. Clear goals give your plan direction. Don't just say, I want to be rich. Be specific, I want $1 million for retirement by age 60. Break goals into short-term, 1, 3 years, mid-term, 3, 10 years, and long-term, 10+ years. Short-term money shouldn't be in stocks. Keep it safe and accessible. Mid-term goals can use a mix of stocks and bonds, balancing growth and caution. Long-term goals like retirement are where stocks shine. Let compounding work over decades. Align your investments' risk with your timeline. Define your goals, match them to your strategy, and you're ready to build wealth. Purposeful investing starts with clear, measurable targets. Investing wisely isn't just about picking the right stocks or funds. It comes after building a solid financial foundation. Think of it as constructing a building. You wouldn't start on the roof without a strong base, would you? First, create a budget. This is your financial roadmap. Know exactly where your money goes each month, and most importantly, spend less than you earn. This difference is key to building wealth. The gap between your income and your expenses is what you'll invest. It's the fuel for your financial future. Next, build an emergency fund. This is your financial safety net. Aim for 3. 6 months of living expenses kept safe and easily accessible in a savings account. This protects you from life's inevitable surprises, job loss, medical bills, car repairs, without having to dip into your investments or accrue more debt. Finally, and crucially, eliminate high-interest debt. Focus on credit cards, payday loans, and any other debt with an interest rate over 7%. These are financial anchors holding you back. Paying off high-interest debt is a guaranteed return on your money, often a much higher return than you could achieve in the stock market. It's often better than any investment you could make, freeing up cash flow and reducing stress. Don't start investing aggressively until your foundation is strong and secure. Budget, emergency fund, and debt-free living are your safety net, providing stability and peace of mind. Without these crucial elements, your investments are at a much higher risk from unexpected setbacks and market volatility. Build your base first, brick by brick, then invest confidently for the future. Think of it as pouring a solid concrete foundation before building your financial house. It needs to be strong enough to withstand any storm. A strong foundation lets your wealth grow securely and steadily over time. Protect your progress by preparing for the unexpected with insurance and a solid financial base. Only then, with a solid foundation beneath you, are you truly ready to invest and build long-term wealth. Investing is all about balancing risk and reward. Higher returns mean higher risk stocks swing more than bonds but reward you over time. Know your risk tolerance. It depends on your age, goals, and how you handle market swings. Diversification is your best tool. Own hundreds or thousands of companies through index funds or ETFs. This spreads risk and protects you from any single company's failure. Bet on the whole economy, not just one stock. Diversified, long-term investing is the simple, powerful way to build wealth. You need an investment account to hold your stocks and funds. Use tax-advantaged accounts first, like 401ks or IRAs, to save on taxes and grow your money faster. If your employer offers a 401k match, always contribute enough to get the full match. It's free money. After that, consider a Roth IRA for decades of tax-free growth. Max out these accounts if you can. Once you've used up tax-advantaged options, open a regular brokerage account for extra investing. Remember, taxable accounts have no contribution limits, but you'll pay taxes on gains and dividends. Use the right account for your goals and maximize your tax benefits. Start with retirement accounts, then expand as you grow. Ready to invest? Choose a reputable, low-cost broker like Vanguard, Fidelity, or Schwab. Opening an account is quick. Just fill out an online application and verify your identity. Link your bank account to fund your new investment account. Set up automatic, recurring transfers to invest consistently. Pick a broad index fund or ETF, like VTI for the total US stock market. Enter the ticker, choose your amount, and click Buy. Congratulations, you're now an investor and part owner of thousands of companies. The hardest part? Letting your investment grow undisturbed. Automate your contributions and stick to your plan. Don't overthink, just get started and keep going. Your future self will thank you. The real challenge, the true test of an investor, is staying disciplined for the long haul. It's about maintaining focus and commitment, even when faced with uncertainty and temptation. Markets rise and fall, they are inherently cyclical. Ignore the noise, the constant chatter and speculation that can cloud your judgment, and resist emotional reactions. Don't let fear or greed drive your decisions. Don't chase fads, those fleeting trends that promise quick riches but often lead to disappointment, or panic during downturns. Market corrections are a natural part of the investment cycle. Stick to your plan, the investment strategy you carefully crafted based on your goals and risk tolerance. And keep investing regularly, consistently adding to your portfolio, no matter what the headlines say. Focus on the long term, not the short-term fluctuations. Market crashes are normal. They are an inevitable part of investing. And for long-term investors, those who understand the power of compounding, they're opportunities to buy at a discount. It's like a sale on your favorite stocks. Check your portfolio once a year to rebalance, to bring your asset allocation back to your target levels, not to obsess over performance. Don't get caught up in the daily ups and downs. Rebalancing keeps your risk in line, ensuring you're not taking on more risk than you're comfortable with, and helps you buy low, sell high. It's a disciplined way to take advantage of market volatility. The simple path, the most effective approach to long-term investing: buy low-cost index funds, diversify your investments across the entire market, add money consistently, regardless of market conditions, rebalance annually to maintain your desired asset allocation, and ignore the noise. Tune out the distractions and stay focused on your long-term goals. Let compounding do the heavy lifting. Time is your greatest ally in investing. Wealth building is a marathon. It's a long-term journey that requires patience and endurance, not a sprint. It's not about getting rich quick. Be patient and persistent. Consistency is key to achieving your financial goals. Stay the course. Maintain your investment strategy through thick and thin, and you'll reach your financial goals. You'll be well on your way to securing your financial future. The tortoise wins the race. Slow and steady wins the race. Your future self will be grateful you stuck with it. You'll thank yourself for having the discipline to stay the course.